Let's get back to our task force. With us this morning is Christian Thwaites. He's president and CEO of Sentinel Asset Management. Also, Jeffrey Sout, who's chief investment strategist at Raymond James. And Jeff, I know that when you'd been looking at the moves over the last few weeks, you thought, okay, maybe we have touched a bottom. Does this morning change your mind on that?
It sure does. I thought we had a panic low on October 10th. Typically off of a panic low, you get a 1.5 to 3 day rally, and then markets come straight back down. 60% of the time they hold that panic low. The other 40% of the time they make a new low, but generally not by all that much. So this morning is somewhat surprising.
Okay, what happens in those rare scenarios when they move much lower? What tends to take place over the next few weeks?
Well, you tend to get a crash. I mean, markets are very oversold right here, but crashes tend to come in very oversold markets. And today is likely a day to be experienced rather than understood.
And what are you going to be doing as we watch this unfold this morning, Jeff?
Well, our theme ever since the House of Representatives turned down the original Paulson plan has been survival. And our mantra has to be the second mouse rather than the first mouse. And anybody that has tried to get the cheese over the past 3 or 4 weeks has been caught in the trap. So we're continuing to be the second mouse.
Christian, welcome to Squawk Box. Interesting day for your first time out with us.
Yes, thank you very much.
So what do you think of what you're seeing right now?
Obviously, the volatility is unprecedented. We've seen it on the VIX, we've seen it on individual stocks, we've seen it on the volumes and now futures. Going into today, just a ton of different economic news that which needs to come out over the next few months before we see any kind of stop to this volatility.
Is this a move that you think is happening on fundamentals, or is this just chaos?
I think it's fundamentals now. I mean, the chaos was sort of dutifully put in place by the Treasury over the last 5 to 6 weeks with this completely wooden ear that Paulson managed to exercise during this sort of semi-bailout. With the markets sort of just about getting over that, it's now having to digest a slew of bad economic data with the corporate earnings season in full flow, with nothing very positive coming out of most earnings at this point.
Yesterday's action wasn't terrible, right? I mean, we closed higher. The earnings,
yeah.
You know, this consistent theme. A company like Microsoft beats for the quarter, negative guidance for the quarter to come. Why is that a surprise? Why do the Japanese wake up and trade down 9.6%?
I think because they're worried about the U.S. economy, and of course their own economy has been teetering for so long on this edge of export-led revival, just getting over this sort of lost decade and a half. It doesn't take much to knock the confidence down on the Nikkei. And
exports and then their yen, and it's just, I mean,
the yen trade
Sony's down 14% overnight.
Yeah, I mean the yen should be a safe currency, and it's sort of not behaving in the way it should be. Everything's flowing into the dollar, so that's enough to hit confidence.
You know, Jeff, we had guests earlier in the week who had told us at least you're getting back to the point where you can start to look at fundamentals, and that's good news. What happened?
I think you're in a liquidation phase. I think Christian had it exactly right. I think there's a bunch of wrong-footed moves by Hank Paulson and the Illuminati of the country, if you will. And I think we're paying for it right now.
What should they have done? What did they do wrong, and what do you think they should have done?
I don't think they should have wiped out the equity holders in Fannie Mae and Freddie Mac. I think that was a first and a game changer. I don't think they should have let Lehman, one of the primary Treasury dealers, go bankrupt.
But you're talking about a scenario where there is no risk for anyone who's ever invested in this market in the last 10 years.
Yeah, but you can't, to the rational investor, why would anybody in the world put capital at risk when the government can come in and wipe you out overnight if things don't go the right way?
Quite honestly, they've done things differently than they had done in Europe. I mean, if you take a look at what happened in England, they're not talking about going in, wiping out investors in any financial stock that they end up putting money in. They're talking about taking a small stake.
And politically, we were lucky to get the bill passed that we got, Jeff. I mean, there was no way you were going to sell the Hill and the American people on rescuing shareholders of the company that got homeowners in all this trouble.
I think you're spot on right there, but I think the politicians didn't rise to the level of statesmen and played politics with it, and I think we're in a mess right now because of it.
Christian?
I think we're in a mess, but for slightly different reasons. I think the biggest mistake that Paulson made was to sort of give the Lucky Nine financials a deal which Mitsubishi, Warren Buffett, and the UK government got much better terms at. Why the US taxpayer is getting 5% on pref shares with the Lucky Nine?
All right, you guys are arguing a complete opposite poles on this. You think the deal was too good for the investors. Jeff, you're saying it was too bad for investors. So this is exactly the problem that we wind up with, right?
I think that the politicians didn't rise to the level of statesmen, and I think the investing public is disgusted with the financial system, the economy, and our elected leaders.
I agree with that.
Jeff, are you guys going to have the intestinal fortitude today to not? I mean, people are going to wake up, right, and they're turning on their screens and they're seeing the Dow futures are limit down. Do you want to sell into that? Do you think today poses the real threat of a crash today?
No, my indicators are as oversold as they were at the bottom in November of 1974. I absolutely don't think you sell stocks here.
You don't? This is a point where you just hold on and wait and see what happens?
If you haven't raised cash. Now, we came into the year with a high cash position. We've been cautious all year, as you know, Becky.
Right.
And this is the opportunity. If you can keep your head while others around you are losing theirs, it presents opportunity for the well-prepared investor. So,
Jeff, what kind of moves would you be making again? I know we touched on this briefly before, but what do you start to do as you watch severe sell-off potential today?
Well, you don't do anything on the opening. You wait to see if you get a second shoe to drop. Usually on the Monday, Tuesday, people go home, brood about what happened this week. You come in next week and hopefully get a washout on Monday, Tuesday.
Christian, what do you do?
We'd like to be buyers at this point. We saw some good announcements yesterday from some of the defense contractors. There's a lot of companies out there trading at 8, 9 Ps, 3 or 4% yields, covered 3 or 4 times low debt. There's some good quality if you go looking for it, and we're buyers.
Okay. Jeff, thank you very much for joining us today. Christian, welcome again, first time, and thanks for being on set with us. Appreciate it.